Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Like we always do when we get started, I want to make sure that we're covering the action plan first. So you'll see there on screen, we've got the action plan, and there is some action required, some action recommended this week. So I want to make sure we get that out of the front, out of the way up front. I will be discussing kind of the thought process behind that. But the first thing is we want to sell 30% of our Q4 corn. That's not all of your corn production. That's not, all of your old crop, but it's the bushels projected to sell in the last quarter of 2024. We want to be moving 30% of those, and I'll get to the thought process behind that later on. Also on soybeans, no action required. So we're going to go through now, like many times we do, we're going to go through kind of a little bit of a market update, but I'm going to blow through that pretty quick because I want to spend most of the day today talking about corn. I think that requires some attention, and it's good news. It's good stuff, but I want to kind of move through this market information quicker, and so that we can get to the corn faster. So here's the first thing. Just again, market update. Thinking a little bit about the market. This is the U.S. dollar index. U.S. dollar index, and we'll keep that in the blue. We'll move this down here to the bottom if we can. All right. We had what is called a golden cross here. That's when the 20-day moving average, see this is the 20-day moving average, crosses the 200-day. So here's the 200-day. So this is a golden cross, and that is a very bearish technical signal. And in fact, once we got that cross here, once this cross took place, we see that the US dollar index has just skyrocketed. We aren't quite, we're coming up to the levels, recent levels from here. We're not back to those 2023 levels or anything, but it is important just to make note. I believe it was last week, we talked about the strengthening dollar, and that's definitely something we need to keep track of and stay monitoring. Now we'll go to a little bit of Brazil production. I spent a lot of time on that the last couple of weeks, but corn is the central story, and so we're going to kind of move through this pretty quick. Let's get a highlighter for this one, and I just wanted to move this over here to the side. Okay, and so I just want to highlight a couple of numbers. The first thing is where we are, total planting, past the halfway mark, almost 10 percentage points ahead of last year's planting pace. And I'm just going to pick out states that are over 80% planted. So Paraná, over 80%. São Paulo over 80%. Mato Grosso do Sul. I'm going to show you some pictures from Mato Grosso do Sul shortly. And Mato Grosso over 90%. So we've got 4 states that are over 80%. And they're pretty significant states. And then we'll get another color here for the highlighter. These are, I want to do a little compare and contrast to 2023. So they were at, Tocantins was 25% planted. This year they're 14. Maranhão, this is that northern expansion area. They were 14 last year. This year they're at 24. Piauí was 5% last year. This year they're at 28 for the same week. Bahia was 10% last year. They're at 28. So this is that northern expansion region right here. And this is fast. That northern expansion region is planting very, very fast. Again, I don't want to spend much time on the Brazilian crop because I think that the main story is elsewhere. But let's just look at some pictures. It's always fun to look at crops. This is from the state of Mato Grosso do Sul. A customer down there, you might recognize those bins. Probably 2-3 weeks ago, I showed a picture of this same guy's farm. So it's looking real good. Just good on many levels. It's a good looking crop. That's developmentally where it's at. Nothing to complain there. And so that brings us to our kind of our market segment, where we talk about markets. And I should have included the pyramid here. You might be familiar with the pyramid. I always do that at the transition point. Let me make this a little bit bigger. Always talk about the pyramid. So the foundation of the pyramid is establishing your marketing portfolio. So specific to your operation, how do we split up your bushels? The goal is to be cash, cost, and market. How can we place your bushels in a portfolio that makes sense to you? And that's something that, if you're watching this close to real time, we have worked on together. And that's, how do we set up your marketing portfolio? The next level up, and that's where you really come to the importance of these weekly videos, is week by week, how do we tweak that portfolio? How do we move some of those sales a little faster? Are we looking to re-own it? How do we tweak that portfolio kind of bucket by bucket? In this week, there is some action required. And then the top level is action. So you started out, if the last couple of weeks, if you watched the video, say no action is required, you need to shut off the video, go do something else, that's fine. This week, there is some action required on corn, or action recommended, I would say. From my standpoint. So we're going to kind of spend less time on beans, kind of blow through the beans, because I want to give corn a little bit more attention, because that's where we really need to be being decisive about taking action and moving forward with that. So let's just look at the beans real quickly. The beans are having a hard time with a rally, right? They're really having a rough time getting up off the ground. We'll keep the blue for now. So what happened? We had these lows in August. We came back and tested similar lows last week. We had a nice run up here, late September, early October. This green line, this blue line right here, this is the 20-day moving average. So that runs all the way down, but I don't want to get it marked up over here. And then we tried to get a little rally off this low, and then we're right back down to testing the 20-day mover. If you remember from previous videos, my thought, what are the resistance levels that I'm looking at? I am looking for, these are what's in blue. This is what I would call let me get that out. Okay, this blue, these are the support levels that I'm looking at, which is really just 2 of them. 10 and just a hair over 10, like 10.05. So basically $10, this is the January 25 contract, $10 beans needs to hold. And then let's just go call resistance levels red. So here, we did not get back up to this resistance level. That's the first one I'm looking at. And then we've got this 200-day. That was a little crooked. We've got the 200-day moving down. That's another one. So I think my thought is, okay, we failed at 240. That's frustrating. I would like to think that this, let me clean that up a little bit. I would like to think we come down here, we bounce off this, and then we make another run up here. Is that guaranteed? No crystal ball. No, I don't know. But it's for that reason that I'm not recommending sales. And if we fall, oh, bummer, we fell. So far, we've held at $10. So the $10 has been a solid support. So I'm just not excited about selling beans. And that's the Main reason I haven't done it. The other reason I'm not too excited about selling beans is the position of the funds, the spec funds. Let's get this in red. So under this threshold, right about in here, oh, that was short. Right about in here, under this, when we're under this, this is actually a buy in my book because the bean market is artificially low. So this is a buy. So I'm not excited about selling beans above a support level or at a support level with the spec funds in a buy. I'm just not thrilled about it. Now, it's going to be hard to mount a rally because you just saw the pictures out of crops in Brazil. So yeah, that's going to be hard to mount a rally, but that's it. Corn, now we're going to switch most of the rest of the time. Now we're going to be talking about corn. Corn is a different ball game and it's a different story. And I hope that what we're seeing in the corn market becomes a little bit of encouragement of what we might see in the bean market. And so I want you to follow this thought process on corn. I really want to work through this. So let's get a little more hopeful color. Maybe we'll call this green. The first thing that I want to point out is this thing right here. Let's get an arrow there. It's an ever so small, but this is the first net positive position we've had from spec funds the entire year of 2024. We have never been in this area. Never been in this area. We've never been above zero all of 2020. Oh, you're not seeing my screen. Bummer. There we go. Okay. Let me mark that up and let me actually go back and do the beans again because I think you missed the explanation on the beans. Let's go back and get some of that thought process. All right, so let's go here again. Marking that up. Okay, so let's make the support blue so we can see this is the support line on the beans, right around $10. And then this 20-day moving average is also support. So far, we're testing that support. I am not thrilled about the downside on the beans. Now, let's go call it red. Let's call it resistance. This is the resistance I'm watching, 1080. This is the January contract. And then this 200-day moving average coming down. My hope, my thought is that we're going to get a bounce here and then it's going to work its way back up. We don't know that. But I'm not going to be overly concerned about beans because every time we've come down here, it's found support. So is this going to change? I don't know. But so far, I'm not overly concerned about the downside. I don't think we have a reason to be overly concerned. It's been holding so far. That's why I'm not recommending action on the beans. And just to add to that story, let's look here at the funds, at the spec funds. I'm just redoing this because I didn't have the chart up last time, and we want to make sure you can visualize it. Under about this level, under here is where I'm willing to be to buy soybeans because the bean market is artificially low under here. So we're still here in a buy category. I'm not thrilled about selling that. Now let's look at corn. Now let's get the corn chart up there, and I really want to focus on corn. We'll go through the thought process later, but let's just look at the corn because this is where I really want to point out some of these major issues. So let's get green because it's helpful. The first thing that I want to point out is this point right here. And I know it's ever so small, right? It's hard to see. But all of 2024, we have not had a net positive position on corn until last week. Last week is the first time spec funds were like, maybe I should buy corn. Maybe corn's going higher. That was the first time. Now I'm not, yelling at the top of my lungs saying, yeah, corn's going to go higher, but we've been living in a universe where we've spent most of the year here. I should have made this red. Let's make that red. It's bad news. We've spent most of the year below kind of here in this danger zone of no good. And then now we finally get positive. That is noteworthy. So it's not a big enough, it's not like, hey, sell this thing, spec funds aren't going to take it higher, but they're finally willing to be bullish. And then what are some of the reasons that also point towards bullishness? So there's a concept called bull spread, which means the nearby contract is moving up faster than the deferred one. So if we look up here, let's get a highlighter. Let's make that yellow. And I want to go ahead and just show you what we're looking at up here. There we go. So we have, this is the difference between the December contract. It's very small to read, but it's the difference between December and July. So this is the difference between December and July. And what happens is when you get December moving up faster than July, you get what's called a bull spread, which means the difference, the December is gaining ground on July. Ever since the low that we've had back in August, we've had this situation basically where it peaked on its, and it's been bull spreading ever since. So another way to think about it is if you have to sell December or July, which one are you better off? Well, back on the lows in August, you would have been better off selling July versus December. Now it's moved, what, 12 cents in your favor, 14 cents in your favor to sell December over July. Just tuck that away as information. What else is adding to this bullish sentiment? Here's a price of corn in Brazil. I'm not going to get into all the nitty gritty and all the reasons because I've talked about it in previous videos. But it is noteworthy just to say that corn in Brazil is at its highest level since May of 2023. You'd have to go back and look. I guess we had, if you look at the January contract, there was one higher tick. But I mean, where today's session is within, it's one session away from the high tick of the year. So corn in Brazil is strong. Corn is bull spreading. Basis. Okay, look at what happened to basis. This is for Indiana. This is just for the state of Indiana. So again, it's a proxy. I'm a Purdue grad, so I'm a little biased, and I also like their basis tool, but you're going to have to put up with me on that. So this is just the ethanol plants. That's the first thing. But look at this jump. Look at what's happening to basis. That's a major jump. And if we skip and we look at the next thing we're going to look at is the Ohio River Basin. So let me cancel this and let's look at the Ohio River Basin. So this would be the proxy for the export market. And it's the same thing. We're getting the same exact jump, or a very similar jump, I should say. Look at this, Ohio River Basin. And then check out what happened here to basis. It's really strong. Let me get this big here again, and then hopefully I'll remember to go back. So there's a concept that's called cash spreads futures. So whenever you see a cash rally, basis is strengthening. That's the first step. The next thing you'll see is spread strengthening, which means the nearby is gaining strength over the deferred. And then the last thing you see is the move in basis. So what we're seeing was strong cash markets followed by a strong bull spread. That is those are bearish sentiments. That's a bearish sentiment for corn. So you're going to say, hey, Aaron, why are you selling corn if it's finally looking bullish? A bull spread, that's a bullish sentiment. Strong cash prices followed by strong spreads, that's a bullish sentiment. Why would you recommend sales in a bullish environment? Now let's shift over and let's just look a little bit at the corn market prices because it's important for us to think about it. And then we'll go back to the thought process and how how I come by my recommendations and why I come by it. But first I want to just look at the corn market. This is this is March contract for Board of Trade corn. So if we look at this, okay, this is the previous high from late September, early October, and then we couldn't even make it quite back up to that level. We made it a little bit under it, and then let's go down to the lows. So we have this low from mid-August, and then just a one-day low. If you take out that one mark, it's actually about right there. But there's something interesting that I want to show you, and you'll notice if we were to draw a line through this, that's an upward trending line. And then if we were to get this green here and we were to draw a line through this, let me do a little bit better with that. If we were to draw a line through this, that's downward trending. That's what's called a wedge. it's looking like this market might be in a wedge. And then when it wedges, it's like the market is coiling up. And then which way is it going to break out? My bias is it probably breaks out to the upside. So I'm still optimistic this corn market. We have strong basis. We have strong, let me get this a little smaller. So we have strong basis. We have bull spreads. We have a wedge pattern, and it's looking today with seasonality and everything. I would guess that breaks out to the top. So there's reason for optimism. But I also think it's important now to look at the December contract. So if we go over to the December contract, and let's just take a look at that. Let's just mark that up a little bit. You'll notice on the December contract, that this peak is very, very similar to this peak. So it's basically on the December contract, maybe even get that in I'll get that in a little bit bolder color. This peak, similar to this peak. On the December contract, you'll notice we basically are back up at those previous highs. Is there a chance that this market takes off? Yes, there is a chance that this market continues to rally. That is a very real possibility. But we've seen that basis jump. We've seen that spread jump. And we've seen December come back up to the previous highs. So when I'm thinking about a recommendation, and I'm thinking, okay, of our quarter 4 bushels, of the bushels that we have to sell in October, November, December, our quarter 4 bushels, how much should I be sold to be on pace? How much should I sell if I want to be on pace with by November 15th, if I want to be at that 50% mark? So in my mind, I'm thinking, hey, by Friday, November 15th, I should be at 50% just to be on like linear pace. Now, I'm not saying an average pace is the right thing, but that's a good mental block. Like, okay, that's a good way to be disciplined. If I'm halfway through the third quarter and I'm at 0 sales, because so far I've recommended 0, well, all of a sudden we have a situation where we have similar board of trade price on the December contract to the highest price we've had since, when we'd have to go back to get the similar price, we'd have to go back all the way to June to get the same price. We'd have to go back here. So we're at the highest price on the board of trade since June, and then we're getting that uptick in basis that we just now saw. So we're looking at basically, let's come back to the basis. It's a little different region by region, but you can tell we're at one of the strongest bases. So flat cash prices, it's very likely that on just flat cash prices, you're at your local elevator, you're close to the highest price since like last June. Or at least, board of trade, the price has recovered. So if you think about what should I do, and now let's get the recommendations. We'll do the final. I've already given you the recommendation, but let's just analyze it. Seasonally, this is neither a buy nor a sell in corn. And seasonally, this would be a sell in beans, because sometimes in November, we get a weather scare out of Brazil, South America. Is not the case. Managed money, it's not a buy, it's not a sell, it's neutral. They're pretty close to even. On corn, we're at a buy. On beans, we're at a buy. And then the trend is in an uptrend. And here we're also in an uptrend. So if we just kind of look at this situation, you would say, all right, it's mixed signals on, and I'm going to say that this is neutral, because today we fell down to the 20-day mover. So it's, by the time you're watching this video, it might be in a downtrend for beans. It's not a solid, we're right at the resistance. So with corn, it's neutral up. With soybeans, well, seasonally, sometimes this is a sell, but managed money says it's a buy, and then the trend is neutral. It's very mixed feelings. But if we look at the basis, what we have is, and let's get this here. Strengthening corn basis, big jump this past week. And then on technicals, let's look a little bit about the technicals. December corn near the highs from early October, tied for highest price level since June. Corn is bull spreading. The auto spell is going to have a hard time with that bull spreading. Corn is bull spreading. So for all those reasons, we have corn at a price level that it's been the highest basically since June. It's not a strong sell. I'm not saying bet your farm on this. I hope this is a sell that, when it's all said and done, brings your average down. But the recommendation is to get to 30%. Remember, to be quote unquote on pace to be halfway done with our Q4 sales by the 15th of November, we would have to sell 50% this week. So if you think about it, let's say that you sell 30% this week at the highest or second highest price you've had since harvest or since summer, and you let that corn go 30%, and then let's say it goes up next week and you can sell up and average up, you will be on pace with your rhythm of selling your volumes, because you'll be at 50% close to November 15th. You will be on pace with your sales rhythm at very likely the highest, very close to the highest average price possible in the entire second half of the year. That's nothing to complain about. So that's why my recommendation is sell 30% of your Q4 sales this week. Now let's say that corn dips down. Let's say that corn takes a dive. You sold 30%, it dips down. We can always wait for a support level and then re-own that. And then honestly, that would almost be my preferred outcome, right? We sell up here, comes back down, re-own it, and then we get that next leg up. But either way, it's my opinion that taking 30% of your Q4 sales, taking the risk off of that, taking that cash, taking this price that is, knocking on the door of the best we've had so far, that's a good risk management move. That's all I'm saying. So I hope the recommendation is clear. And then we always have a couple of questions. So let me go ahead and go through the questions and answers, and we will be wrapping it up for this week's video. So let's look at the questions and let's get the image nice and big here. There we go. Okay, should I write a basis contract and sell instead of selling corn? It's not necessarily a bad alternative, but my thought is, from a cash standpoint, just sell the corn, take advantage of the strong basis against the December contract, take advantage of the strong move in the December contract, just put that in your pocket. And then if it falls off, if we get a correction to the downside, then that's when you'd re-own. So the net effect might not be that different, but I'm always going to give a recommendation that I think has, number one, the most flexibility and the most chance of working, and number two is the best, right? So I think your risk reward is in a preferable situation for you to just say, hey, December contract is strong. I could still sell December on what I have available. December contract's strong. And it's bull spreading. My basis is strengthened. Let me go ahead and take these solid results in the December contract in my basis. Let me put these in my pocket. If perchance corn falls off, I'll be doing even better to re-own, instead of just saying, yeah, let me roll this to July and just hope for a higher rally. I would prefer take the result, take the cash, take the win, let the dust settle, decide what to do. The risk that you run is that corn market keeps going up and away. But again, we're at 30% and we've got to get to 100% of the Q4 bushels price by the end of the year, right? So yeah, but if it keeps going up and away, this will bring our average down again. But if your first sale is pretty close to the strongest price that you've had the entire back half of the year, that means your average is going to close out strong compared to the previous 6 months of market information that we've had. So again, that's something in my book we have to live with. is, yeah, maybe I sold a little early and it continued rallying. There's also a possibility to sell. It corrects to the downside or it corrects sideways, and you say, let me re-own it, and you have better results. So I wouldn't say it's a mistake to write a basis contract here. It's just not my recommendation. Another question. Will soybeans take out recent lows? So if you remember, the exact number varies contract by contract, but for a good mental image, so far every time we've dipped below about $10, we've had buying pressure. So for me, until we in fact demolish those lows, in my mind, I'm thinking very likely. It seems to me like soybeans below $10 kind of starts giving a flashing light that says, hey, why don't you buy these beans? They're under $10. If that's the case, I think it's important for us to go back, not to the 21, 22, 23 numbers, but like the 17, 18, 19, where $10 beans wasn't a horrible sale. So if we've established a floor where under $10 it gets bought, that's inflation in my book, right? So it's not great, right? It's not like we're excited about $10 beans, but I'm not convinced that they will take out the lows. And if they do take out the lows, I would feel more inclined to believe that happens maybe close to the Brazilian harvest, more so than like short term. Right now, the crop in Brazil looks great, but it's not guaranteed. It's not even all the way planted. So it still needs to be planted. Then it needs to get rainfall, which it probably will. It's probably going to be a good crop. It's looking that way. But it's very unusual for us to not have one or two hiccups. And as long as there's the possibility of that shortage, potential reduction in Brazil's soybean crop or even Argentina's, I think there's enough uncertainty that will make people say, maybe I do want to buy this. So I'm not convinced. I don't have a crystal ball. I don't know. Maybe we'll take out the lows. I'm not convinced of it. I'm not. We've touched that resistance 3 times. Sorry, we've touched that support level 3 times, and it's not gone through it yet. Will the strong dollar hurt grain prices? I'm actually watching both the exchange rate between the U.S. and Brazil, because I work with a lot of farms down there, as well as just the dollar index that I showed you. I'm watching that a lot closer than I typically would. I think that there's a story there. I don't have a ton of conviction about the direction of that, but it is something that I'm watching very closely, and I'm studying up as much as I can, because there's 2 ways to think about it. If we have a strong dollar because we're going to have an increase in interest rates because there's inflationary pressure, well, okay, the strong dollar might hurt exports, but the inflation tends to be good for grain prices. That's one way to look at it. And back in 2023, that was the case, right? We had a strong dollar, but stronger dollar index, but it was because we had high interest rates, and we had high interest rates because we had inflation, and grain prices did just fine. Now, if we have inflation under control, but we still have a strong dollar, that's something that will be a little trickier to read, and that could hurt our exports, and that could change the name of the game. But what we're seeing in corn right now, we're seeing actual demand. The actual demand for physical corn bushels. We're seeing spec funds believe that, hey, there's demand for corn, and the export numbers might be better than what we expected, and carryouts are getting smaller, and turns out people still need corn. And so as long as that's the case, it doesn't really matter. If you need corn, you need corn. It doesn't really matter what the dollar index is. And some of our competitors like Ukraine and Brazil aren't really suited to supply the corn market quite like we are here. So as long as it's a demand-driven rally, the dollar index might not play into it very much. But that's definitely something that I mean, on a daily, if not every other day, but on a very regular basis, I'm checking in on that. I'm studying up on it. I think it's too soon to tell the impact it'll have, but I definitely think that's a factor, along with inflation and some other economic unknowns, trade wars. There's, we got a new president. He's coming in, and we got to see his policies, and we got to see how that's going to impact us. I'm not convinced it's positive or negative, but I do think it's a story that we should be watching, and it's something to definitely keep in mind. But I don't like to try to outguess the next economic move as much as I like to just say, rational thought process of how we're going to parcel out our sales based on a strategy and based on key indicators. And I mean, if you agree with my logic, I think the 30% of Q4 sales is a pretty solid strategy, where if it goes up, great. If it goes down, great. So that's the recommendation for this week. Hope you have a great week. Feel free to send in your questions, and we will be in touch.